Conversation off with Khoon Go, Head of Asia Research at ANZ Research. Khoon, very good morning to you from where we are, and thank you so much for joining us today. Let's just start with your view on, let's start with US equities actually, and the cues that they follow. Is it going to be on a day-to-day basis for some time at least tracking what President Trump says?
Good morning to you. There's no doubt that the Trump-induced volatility is back 1 week into the hot seat, so to speak. And we've already seen the markets move in tandem with either his social media posts, comments, or his executive orders. But for this week in particular, I think part of the reason why we've seen such weakness in US equities futures and also in Japan as well, and I think that's also spilling over slightly into the Indian market, is market concerns about the new AI tool from China, DeepSeek, which some has saying is that it's cheaper and almost as good as the current AI products out there by US companies. So I think that's partly what's weighing on the US equity. So yes, Trump is definitely inducing volatility, but what's happening in the tech and AI world is also having quite a lot of implications for markets as well.
Okay, let's talk about the Fed meet. Considering that the consensus seems to be that there will be a pause, a pause in interest rate movements right now, no cuts in sight, how crucial does this meet and the commentary become in view of what President Trump has said, that he wants interest rates to come down?
Well, there's no doubt that President Trump favors lower interest rates. During his first term, he pretty much tried to bully the Fed into cutting rates. And I'm sure this time around, he will try and persuade the Fed to lower interest rates. Now, we're not expecting the Fed to move on rates this week, and market certainly is not pricing any change to interest rates. I think the Fed, after having cut by 100 basis points since September last year, is going to take a pause and assess what the 100 basis points of cuts has done to the US economy so far. Now, the US economy is still in root health. Inflation has been a bit sticky, so I think that's the primary concern for the Fed. But I think importantly as well, the Fed will want to assess what the cumulative impact of the Trump administration's policies will have on the inflation outlook. I think at this stage it's still early days, but the tariff action that he has threatened against Colombia, could be the start of what will be a pretty volatile trading environment. So I think that's something the Fed wants to take pause and assess before deciding on their next rate move.
Khoon, good morning. Is it too early to call a top on the dollar? We've seen it come off quite substantially towards the end of last week. And you saw the dollar index, I think, drop by more than it did in over a year last week. But then do you call an end to that? Do you say that from this point it'll be a little softer, or is it too early to do that?
In my view, I think it's still premature to call a top for the dollar. Yes, we did see a bit of pullback last week, but remember that pullback was partly because the markets were a bit relieved that the various executive orders that Trump signed did not include an actual formal increase in tariffs against China or Mexico or Canada. So part of that relief resulted in the dollar backing off. But as we know, the events recently with regards to Colombia shows that, look, the tariff threat is still very much real. And we might start to see the market reprice that, particularly, and this is important for this week, Trump has said he plans to impose 25% tariffs against Mexico and Canada by 1st of February. Well, that's coming up real soon. And if he makes good on that threat, then I think we're going to definitely see the dollar rally back. So as I said, a lot of uncertainty, too soon to really call a top to the dollar at this stage.
Khoon, how are you looking at emerging markets, especially India? Big event this week for us at the end of the week, actually, on a Saturday. 1st Feb will be the presentation of the union budget, and a lot of expectations this time round that CAPEX will be pushed. How are you looking at that bucket of emerging markets with the focus on India?
Well, for emerging markets generally, particularly in Asia, the focus very much is on Trump's trade policies. Now, a bit of relief so far, which is why we've seen markets like China and Hong Kong and other parts of Southeast Asia rally on the back of that. For India, it's under a bit of pressure, partly because India is going through a cyclical slowdown. Growth has been weaker than expected, and after being a huge recipient of large FPI flows the last couple of years, we're starting to see some of that unwind. So for the union budget, I think the focus will be on whether or not there'll be a renewed push on infrastructure and various other policies that will help to stimulate and drive a recovery in the Indian economic growth. I think that's going to be quite important for markets. I think beyond that, what's happening to earnings and things like that. And importantly, I think whether or not the Trump administration might impose any form of tariffs against India also will be quite crucial to watch in coming weeks and months.
That yet, Khoon, but there's also, among the countries that you mentioned that have higher tariffs imminent, China did not make that list. In fact, comments that were made by Donald Trump recently seem to suggest that he's a little softer than was anticipated on China, and he's looking for a deal. That's the latest that we've heard, at least. What is the implication of such a deal going through? Is this something that the market is not anticipating?
Well, the market was pleasantly surprised when he mentioned in this interview last week that he'll rather not impose additional tariffs against China. But, again, it all depends on, whether or not both sides can reach some kind of agreement. Both sides haven't really started talking on any deals yet. I think the most pressing one at the moment is regarding TikTok, obviously. But the fact that he's basically toned down his rhetoric towards China, I think has been taken positively by markets. But this can change at any moment, and I think that's part of the difficulty that any investor will face in the current environment. That Trump might say have some soothing words one day, and then he might backtrack and use more forceful language further down the track. So it's very hard to decipher and be absolutely sure where he's trying to get with in terms of US and China. So we'll just have to watch and hope for the best.
Right. Makes life difficult for you as an analyst, certainly, and for us as well. It's exciting nonetheless. Thanks so much, Khoon, for joining us this morning.